So the market just had one of the biggest bounces in US history. Nasdaq, S&P, and the Dow all up huge. Everyone's cheering, and suddenly folks were acting like the worst is behind us. But I'm here to tell you, pump the brakes, because this is all going according to script. And the next few chapters, they ain't so pretty. The rebound isn't what you think. Yes, Trump delayed most of the new tariffs for 90 days. The markets ripped higher on that news, but let's be crystal clear. Nothing actually changed. The tariffs, they weren't removed, they were just lowered to the low end of expectations. And that's a trick markets fall for over and over again. The tariffs aren't gone, they're just a can that got kicked down the road, and then we'll see it again in the next 3 months. We priced in Armageddon. We got slightly less than that. So risk-on traders jumped in, algos fired, shorts got squeezed, and boom, Nasdaq prints its best day since 2001. But that's not strength, that's just relief. And remember, when markets bounce hard off the lows like this, it feels good, it feels bullish, but that kind of volatility usually shows up in bear markets, not in healthy ones. China isn't going anywhere.
I'm gonna have to stop you right there, Bob.
So our biggest trading partner, China, is still very much in play. Tensions aren't cooling, they're escalating. China fired back with tariffs of their own up to 84% on US goods, with the US following up with over 100% now on their imports. That's not a trade thaw, that's a trade war playing out in slow motion. And it's going to keep pressure on global supply chains and on corporate margins, and ultimately on the consumer. Remember, like I laid out in my tariffs video, companies don't eat tariffs, you do. Prices go up, spending slows down, margins get squeezed. Growth slows. We've seen this movie before.
What the hell?
The bond market is trying to tell you something. Meanwhile, US Treasuries, the so-called safe haven, are getting dumped. Yields are rising. The 10-year hit 4.5%, not because of confidence, but because of concern. Foreign buyers? Nope, they're selling. Domestic funds? Actively reducing. When that much US debt is for sale, it's not a vote of confidence. It's a signal that something is off. And when bonds sell off and equities spike like this, it's not a sign of strength. It's a market trying to price in chaos, and that's when volatility takes center stage. Why volatility isn't going anywhere. Tariffs, geopolitical risks, weak global growth, and erratic policy moves, that's the cocktail we're sipping right now. And it doesn't taste like stability. This kind of price action, it's not the start of a new bull market. Again, it's classic bear market behavior. Wild swings, both ways, big green candles that mask the fact that structurally nothing has changed. We're still dealing with the trade war uncertainty. We're still staring at soft global growth. And we've still got the Fed walking a tightrope between inflation and recession. This volatility isn't a glitch, it's the new norm. The reckoning that's still coming. You know, we're still staring down the barrel of a potential recession. I mean, Jamie Dimon's sounding the alarm. Larry Summers is out here saying this could cost millions of jobs. I mean, JP Morgan just raised its global recession odds to 60%. You can't tariff your way to growth. You can't bully global trade and expect no blowback. And you definitely can't ignore the signals flashing red just because the market had a really great green day. The script hasn't changed. We're just on the next page. And the next few pages, that's where it gets rough. Now listen, I'm not saying I'm against tariffs. I want an even playing field too. I'm just saying don't let short-term euphoria blind you to long-term risk. This is the time to stay nimble. Don't get too caught up buying with momentum and stay hedged. Be targeted and pick up stocks you like on dips and stay aware. Earnings are coming up, and though they're expected to be decent, cracks may start to show up. This is not a time to be chasing the highs and pretending the world suddenly fixed itself overnight. But yeah, I hope you guys crushed it in the rally. I would have had an unbelievable day, but I had a couple hedges out there that basically took away most of my alpha. So I just couldn't take them off quick enough. Instead, my April 9th was just okay. But I hope you guys crushed it. Again, thanks for watching my video. Do me a solid, like this video, share it with your friends that are talking about markets, and hit that subscribe button if you're new here. I appreciate the love, and remember, kindness is the remedy on earth, so do something nice yourself.